Good afternoon. So wonderful to see everyone back and gathered here today. We had a wonderful morning coming together and really shaping the moment. Our theme is Capital Meets Purpose. I'm so delighted that we had an opportunity to not only come together to kick off the day, but to gather back here again. And we have the great honor and pleasure of having our wonderful guest, Brian Moynihan. Let's start with a round of applause.
Thank you. Thanks. Phil.
Thank you for being here.
Well, it's a pleasure being here again with the group, and it's wonderful to see. Almost see with the lights, but I can feel a lot of people out there. So,
These lights are pretty bright. So, Brian, thank you for being here. I think it's first important to call out, you are the first bank CEO that we've had to join us virtually and in person, actually. Yes, that's certainly a point to applaud. So just to kick off, Bank of America for 17 years has been the lead sponsor for this conference, this gathering. As noted, you were the very first to come here. Bank of America also has the distinction of having the largest portfolio of investment as well into CDFIs, over $2 billion. Your team has been nothing short of phenomenal, partnering with many of us around the table, has been a long partner to OFN. Even during my journey before leading my CDFI here regionally, WAKIF, Bank of America has been a part of the journey, making very big investments. Just start us out, you have the industry here, over 2,200 of our closest friends, and doing this work on the ground.
I'm one of 7 kids, so this is like a dinner table.
That's right. That's right. So tell us first, and maybe start out, why are investments in this industry as important for you as CEO? You obviously set the tone and the direction, and it's of obvious importance. And so please share some insights with us.
Yeah, so first I want to acknowledge a couple things. One, thank you for having me. Thank you to what everybody does out here. I mean, it's critically important to make the great American economy work, and so thank you. And secondly, Andrew Plepler is out there somewhere, is retiring this year, and as is, ironically, Kathy Besant. So why are those related? Well, Andrew has been a godfather of this at Bank of America for many years, working with Dan Tenders and others. But Kathy also recognized about 20 years ago that this was a business. In other words, we had to have a core team of people who took responsibility for having the relationships with all the great institutions. And so the two of them together have helped build this thing over the years. They've done it, Kathy in the case has done a lot of other things for the company, but getting that started, coming at it saying, we need to support these enterprises as businesses and think about it and get lenders, so to speak, from our side to call on and make it, and that's led us to $2 billion. So that's one thing. Why do we do it? Because frankly, our reach can only go so far, and we can talk about what we do, but why we do it is we believe in profits and purpose. If you read the annual report, you'll see it right there. It's called the genius of the and. You can produce great returns for your shareholders, and you can deliver for society. That's not something that is hard to express, but it's hard to do. And so, this is absolutely consistent with that, to reach deeper into the economy in places we might not get there with the expertise of the firms in the ballroom here, with the counseling they can do, working on it connected to the banking franchise. It's just the right thing to do, and it extends our reach. At the end of the day, a bank is only successful as the communities and economies it works with. The CDFIs and the MDIs and the other types of institutions that are represented here are part of that ecosystem, as they call it now, that makes it all work. And so it's no more complex than that.
Absolutely, and that makes a lot of sense, of course, and being able to not only balance, but bring the sensibilities of both. We know
it's the right thing to do, but everybody can say that, but then you got to do it, and that's
Absolutely.
The execution of it's what we've gotten pretty good at, we think.
Absolutely. Yeah. I think $2 billion represents the execution in that, for sure.
Yeah.
So I think I'd be remiss if I didn't ask you as well and didn't get perspective just from your perch, your lens of the economy.
Sure.
We know that we're in some times of, I'd say volatility. with understanding not only from interest rates to supply chain issues. What's your perspective, at least from Bank of America, and seeing the impact of the economy with some of this volatility on communities, from small business to housing and other areas?
So I think, two or three comments on the overall economy and then talk about it. So if you look at the overall economy, it is slowing down because that's what has to happen after a period of excess growth, after a period of deep drop that was, so in early 2020, the economy dropped deeply as part of the pandemic, then came out, and it came out very quickly because the amount of federal fiscal stimulus, the dropping of interest rates, and now we got to kind of put it back in order, and that's coming together, and so the Fed had to raise rates to do that, and the intended impact of that is to slow down things which are interest rate sensitive. That doesn't feel good because it's going from growth rate to half that growth rate or less, and people express as inflation, but you're also slowing down the economy. And so housing has slowed down, car purchases have slowed down, spending by consumers is slowing down. All that's consistent where we are. The good news is if you look at it, our economists still think it'll be a soft landing, which is better than the alternative, which would be a deep recession to get back in line. And whether it's slightly positive that we predict in the middle of next year when it finally works its way through the system, or slightly negative, what I think people have sort of taken off the table is a deep recession. And given the U.S. state of events, now we've got things going on in the geopolitical scene which can change that on a given day, but we'll look at that. Now, behind that, we know that the impact of higher rates, the good news is unemployment's very low and people are working. The tough news is inflation doesn't work the same for all communities, and that's one of the tough things. And so the faster we get under control, the better we'll get back in balance. And so that's where the question of how's the impact, and we publish statistics about spending patterns by different income quartiles and stuff like that you can see out there. And you can see the impact on the slowdown. At first was more pronounced, and now it's a little more broad, but it was more pronounced in the median wage earning families and under, largely because they got more conservative faster because they got worried about what was going to happen next. But the good news is with employment the way it is, that's a pretty good anchor against a real deep recession.
Absolutely. And just to pull that a little further, so you have a room here of community lenders, of both small and large balance sheets, investing all across the country, and knowing this volatility as well. What insights or perspective would you advise for folks on the ground doing the work in this volatility?
Well, I think, look, at the end of the day, what we do here is to create opportunity, and so this is the Opportunity Financial Network. So, and we think of this as creating opportunity, whether it's for people for jobs, whether it's for housing, whether it's in jobs and jobs training, whether it's for housing, whether it's for equity investments, whether it's for lending for entrepreneurship. And I think the insights now is we all have to be careful because if the economy slows down even more as it's predicted to do, things will get interesting. But if it stays where it is, we should all make it through a good credit performance. Credit is still extremely strong in the industry, and I'm sure in your colleagues here. But we got to keep our eye out and make sure we're doing the right thing. But as we define it, we should talk about the pieces of it. You think about opportunity along all those dimensions, and that's really what we focus on here. And the CDFIs are an incredibly important part of creating opportunity. We can go through the different pieces of it, whether it's employment or whether it's jobs and job skills, or whether it's housing, or whether it's a lot of thinking in our world about not only how we support the CDFI and the MDIs and with deposits and loans and things like that, but also how do we create equity.
That's right.
And I mean equity in terms of the equity in a company that hopefully will create equity outside that company, but equity in that company. So I'd be happy to go through those if you want to talk.
Absolutely. Well, and speaking of equity, actually, and just kind of pulling some beats from this morning, we had talked about the importance of racial equity still. And that's one of the points that I lifted up in some of my comments this morning, that the bedrock in many ways of what we do in this movement, particularly coming out of the civil rights movement to try to create an even playing field. What's your perspective, and what's been not only Bank of America's position, but the view of work with CDFIs to advance Bank of America's goals from a racial equity standpoint, recognizing the last couple of years we've been through, from George Floyd's murder to different commitments that have been made over the years? How have you seen MDIs and CDFIs more specifically playing a role in helping to advance Bank of America's objectives?
So So starting from the beginning, we made a commitment of $1.25 billion in 3 years ago, I guess now, maybe, when the killing of George Floyd. That commitment, I always worry about that commitment saying that's what we did. We actually do all this other stuff. And I always got worried about that. That was a special commitment to accelerate things and drive things harder. But the reality is what goes on. And that's our relationship with the CDFIs goes back many, many years. And so if we go through it, if you think about we are the largest small business lender as ranked by the FDIC with $46 billion in small business loans. The fact of the matter is what we work with, and we work with all the institutions in here in the CDFI networks, is we extend that network. And we extend that network in places that you and your old role, before you did this role, you can work with companies, can give the kind of counseling and advice that might not get financed in our bank. That's right. And then, and entrepreneurs and sole proprietorships, et cetera. And if over time they become more successful, then we can bring them into the system. And so it's that partnership we work with, down to a construction project, who's working on it, how they're working on it, the vendors that get to work in that construction project, the subs, all the different things. We can extend the reach. And so that $2 billion that we've had, which we increased at the time of that were a couple of years ago with the horrible killing of George Floyd, we increased that. But we already had a big base. We were trillion, I think $1.5 billion at that time, $1.6 billion, and we went to $2 billion. But it was really a statement of increase. But we shouldn't forget that we've been doing it a long time, and the program really works. And so what do we try to do there? Try to create a deeper reach into the communities, not only by our institution, but other institutions that have done and done more now, and an awareness even into the non-financial institutions of the presence of these institutions. Frankly, and Congress and others enabled more equity to come into these institutions to provide more leverage for capital. And all those different programs are tremendously important. But if you just back up and think about, opportunity to me is the antidote to the issues that have gone on.
That's right.
And how do you create the kind of opportunity and make sure that opportunity is available to everybody? So we think of that as an employer. And so when we think about our communities and how we support them, we have to be a major employer in them. So and somebody our company starts at $23 an hour, which is about $48,000 a year. It starts with full benefits. It started with health care, and we haven't raised the premium to some people below $50,000 income for 15 years now. Same medical premiums. Above that, they've grown very slowly. And so the idea is that
Yeah, no, it's definitely awesome.
Yeah, $275 per child per month child care support, transportation support, matching in a 401k. So what I say is if we hire somebody, so what do? We created a pathways program that said we hired 10,000 people from low and moderate income communities to come work for our company. We did that we said 5 years, we did it in 3. Then we announced another 10,000. Every one of those teammates coming in is coming in with a career mindset. $7,500 in advance tuition reimbursement. Tonight I'll celebrate with teammates that work for us for 50 years or more in 5-year increments, and I'll have somebody at 65 or 70. And I always say, if you do the math there, they didn't start at 25. That's right. And so they started at 18, and they went to school, and they worked with us. This concept that we talk about now, this lifelong learning and skill building, it isn't new. If you talk to a financial advisor in Merrill, or a private banker, or a person working in the commercial lending business, a lot of them started at 18 and part-time, and then worked part-time and full-time in the summers in college, and then worked for us, and then came to work for us full-time, and then went back to school and got, and moved back and forth. So that, it's wonderful. So we think about employers, and we try to get other companies to do the same thing, including 110, which Ken Chanel, Ken Frazier, and Jenny run. Yeah. We tried to work with them and said, look, we got to start with jobs. That's the currency big companies have. If somebody gets employed by us, it's great. And then we talk about our purchase power, our vendors, and that's what we do there. And then we talk about what we do in lending. In our regular programs, like to make $46 billion in outstanding loans under $1 million, you got to have a lot of lenders out there doing it. That's right. It's a very important practice. The key is we don't reach as far. That's the CDFI, so we have that partnership going. And then we said, look, we didn't see the equity there, meaning capital in the industry. So we said, let's go out, and we saw a real dearth of equity available to Blacks, Hispanic, Latinos, Asian Americans, Native Americans, and women. And so we said, let's go out and find private equity funds that will invest in those cohorts. So the entrepreneurs would be of those cohorts, and they would invest in those cohorts. And we've now committed to 150 funds.
Wow.
$500 million in 3 years.
Wow.
They have funded 1,000 operating companies.
Yeah.
And these are not $100 million slugs, fund commitments on our part and or on the others. You know, they're granular, and it's like I said, I want the money to go to the people who can't come to Thanksgiving anymore because their relatives are tired of asking for money for the business, right? Yeah, that's what you want. You want the people who need 100,000, 200,000, the people that your constituency works with, and they start to need equity. Because a lot of times people say, well, the bank won't give me a loan, or the CDFI won't give me a loan. The reality is they need equity, and then the loan comes on top of it. So this has been interesting, and that took off, and then a lot of people come in, and a lot of these funds were smaller and have gotten bigger and have gone around two and things. And then you move from that, and then you think about, you start to think about the other types of ways you support. With the MDIs, we put equity into them, and then we and the other industry participants are offered services, all to create this competitive framework, to create that basic opportunity of a job, starting a business, and what we can do together to make that more successful. And as we do that, that builds that wealth, and then the equity comes after that. It takes that much. And then on housing, regular way lending, but importantly, the housing support we do, for development housing, $5 billion, $3-4 billion a year, plus the $15 billion personal lending programs, which has down payment support. Those are all part of the network of creating that wealth. But we can never forget it comes back to that job. And one of the things big employers have that I talk about with the groups of CEOs we work with is how do we use jobs as our currency to help create opportunity in communities. And it's been interesting to work with these CEOs in Charlotte and Boston and Providence in 110. It's all this, we completely flipped it around, not programs to skills to jobs, but what jobs do you have, and then work backwards. And go to the Title I high schools and stuff and get the kids that aren't going to get the opportunity. And that will then change.
Absolutely. No, and that's wonderful. Certainly breaking down the breadth and the depth, small business to housing, and some of the impact and investment approach there. To switch gears a bit, we talked a bit this morning, and I gave a call to action for the industry to be focused 100% on greenhouse gas reduction.
Right.
Just recognizing the importance of the climate to all of us. I think Dr. Bullard, one of our speakers earlier, he mentioned, if you drink water, if you breathe air, if you eat food, you are an environmentalist or environmental. Right. You should be focused on the environmental movement in this way. And apologies, Dr. Bullard, if I didn't quite stick the landing on that quote. I will look back at this video, refine it, and I will use it. So it was brilliant. But just knowing the impact of climate to all of us. You all have been a leader in sustainability. And just to look here, you issued your third Equality Progress Sustainability Bond for $2 billion. Right. I know this has been a topic of focus for the last number of years for Bank of America. And I know we don't have much time left, but I want to make sure we really get to climate and the commitment there about Bank of America and its priority and importance. So
if you think about, for all sustainable finance, we have $1.5 trillion commitment over 10 years. For just the environment, we have $1 trillion commitment, and we're through we did about 150, 175 last year, 200 plus the year before, so we're through 400 billion of it. To give you a
trillion with a T.
Yeah, trillion with a T in 10 years, and we're through 40% of it, round numbers say, and we're only 2 years into 10 years, so we'll end up doing more than that. Now, why is that coming that fast? It's because the opportunity created by our customers on it. Where we finance what our customers do, and so you start from the broad picture. We have to make a transition from where we are today where we have to go. It'll take all kinds of energy to do it. It has to be a just transition. In other words, energy for all. Everybody has to have access to energy, access to electricity, access to broadband and things like that. And especially outside this country, which we forget about. This is a different execution. And I was in Rwanda a while back, and I'll be at the COP28 coming up, and you have to make sure you're thinking about it in all the dimensions here. But at the end of the day, so what happens in the United States? We have the IRA. We have a special allocation of the IRA towards communities and through the organizations out here. We have lots of opportunity, but it's really going to come down to a business plan, which is, a plan of execution, which is we're here and we want to go here. And how do we do that? And it's a very granular plan, as Dr. Bullard was it?
Dr. Bullard, yeah.
Yeah, at the end of the day, is every house, every car, every building, everything every human being does affects us. And so if you can continue to provide avenues where people can do things differently, it's great. So I think there's a great opportunity here. All what you do is there's jobs. There's opportunity for a lot of construction work, specialized, technical. There's opportunity for a lot of, that's like solar and things like that, but there's a lot of recladding of buildings, recladding of homes, and all that stuff have to take place, all of which will help, because ultimately what you have to do is, everybody talks about, scope 1, 2, 3, and all that. Everybody's scope 3 is somebody's scope 1 and 2.
That's right.
And what you have to do is drive down emissions in the activity space, and that'll take care of everything else. So if we can get, our bank in its own, to take its electricity use, and we're crossing over, will be 100% renewable, and we're already carbon positive, carbon net zero. Then we'll be net zero in our finance portfolios, and goals are out there and all that stuff. But the real trick is, the first thing is, what do we do? Right. And how do we drive our behavior? Well, every single homeowner in every single community in America, every single business, every single commercial building, every single school, every community center, every bus that goes there, all this can be changed, and that's what we have to go help them. And it's going to take financing ahead of the change. So, if somebody's going to say, I've got a fleet of buses that work with this retirement center or something like that I want to retool, we're going to have to provide the change to do it. And that's where the opportunity is. And it's a big business. I mean, people say, are you doing this for the right, because it's the right thing? Yes, but are we doing it when it's $300 or $400 billion of financing? That's kind of interesting too, of which that sustainability bond is part of it. And so the opportunities it creates are tremendous. And so I think what I encourage everybody here is to not get caught by the far out ideas. There's very basic ideas that you can change dramatically, the way the insulation and heating systems and water heating systems and cooling systems and rooftop, what color it is and all that stuff. We can finance all that. And the payback is pretty understandable. And all the instruments and the buildings and everything. It's really pretty marvelous what the technology can do if we push ahead.
Absolutely. And that's one of the, I think, helpful points, because as I mentioned before, I gave a call to action to the industry this morning. And the natural next question is, okay, what does that mean? Or what do we do next? Yeah. And I think creating that understanding about the incremental steps, or how it's not that we need everyone to change their, focus and approach as a lender. If you're a small business lender, continue being a small business lender, but think through,
right,
from retrofits and other things that can be done.
So one of the things we did with this group called the Sustainable Markets Initiative, which I work on under the auspices of King Charles, with a group of financial service companies in all industries, 250 CEOs. We published a sort of, how do you work at a bank? And we've made that available to everybody. How do you green a bank, from operations we made it available to everybody, and all these institutions can get that and say, okay, first thing is I got to take care of my own house, and then I can go work on helping other people. And the other thing was, we've had 20-some thousand client meetings with clients, that, sort of talking them through. If you're in if any of our customers, and they all are in the supply chain to someone else, if that person at some point is going to ask them this question, where are you on this thing? Because I'm trying to be on this thing, this path. And so if you're not on the path, and I can't do it. And so you see a little bit of the issue that this affects everybody. And yet, one of the major jobs we can play as larger participants in the industry, and you can play as our partners, and we can play together, is to educate everybody of what's coming at them. Because there'll be a day when, even with our vendors, we spend $2 billion plus a year on minority contractors in our vendor chain. At some point, they've got to be net zero, else we can't make it. So we've got to help them make the same transition.
That's right. That's very, very helpful perspective. And I know now we only have a couple minutes left. Certainly want to get your perspective on an area of cooperation, and bringing more of the industry together. As we started out, you have been very energized in support around CDFIs. How can we, as an industry, bring more of your bank peer leaders to the table? Not only thinking about how to further advance the work. I think you guys have shown not only a great model, but putting perspective into action.
Sure.
With not only what you've articulated, but as we said earlier, putting dollars behind the approach. How do we bring others to the table and support the work? Because I think it's also important to note that Bank of America can't do it all.
Yeah.
So how do we bring others to the table?
We try, but we can't.
That's right.
So I think some of that's happened, and I think just the MDIs are here and the CDFI here, and there's crossover, and some that are both and some aren't. But if you think about the whole thing, think about the awareness that came out after George Floyd and educating non-financial services companies about what these wonderful institutions were. There was pretty much an inside the banking industry and treasury discussion that broadened out. So I think there's tremendous opportunity to keep educating outside. One of the things is that everybody gave deposits. Well, the problem is you need assets or else the deposits are just sitting there. So how do you, and frankly, to put deposits into these institutions or make loans available for you to relend, and all you can do is buy a treasury, put in money, that's not exactly creating the economic impact. So I think people had to think of how to develop programs and asset side, things to invest in. And I think that's where we got to educate, that was the interesting thing with these funds, which you could find people that don't need some debt and some equity and some startups and things like that, entrepreneurs as opposed to startups in the techie space, but just entrepreneurs. And so I think we need to educate not only the rest of the financial institutions, and we did that with the BRT, we did that with the BPI, which is the Bank Policy Institute, the Business Roundtable. Yep. We've done that with a lot of institutions, but we need to not let that fall fallow. We need to keep driving that education. But I think what I'd encourage all our colleagues out here to do is to think about how do we move it from I'll put a deposit in or I'll give you a loan to how do we help get those institutions to help us put that money to work.
That's right.
Because that's then ultimately going to do it. It's great that you have it and you can use it, but the reality would be if they also figure out how to use their purchase power to create opportunities for the companies that need to be financed, how they use their equity contribution to create equity for companies that need to be financed, how they, frankly, in their vendor choice project, how they, in their development projects, because a lot of these people are doing stuff. So I think all that is very important, and so I think there's great opportunity, and I think it's all about education and understanding, and frankly, this network, of all educating, and so that next year we should get some corporate CEOs up here so they can talk about what they do, and you can talk about the opportunity they might have. It might be interesting.
Absolutely. We'll see if we can get some other bank CEOs to join us for a Fireside Chat next year. That'd be a great idea. So I know we have about a minute left, and want to make sure as well, any final comments, perspective? We have, like I said, the industry here, and I think looking forward to deepening partnership with Bank of America, of course. Any final comments and perspective you want to share?
Number one, thank you for all you do. Number two, Bank of America is behind you, trying to help you do it. And number three, never forget why you do it. And this is the combination of this is the combination of that mission and purpose, and that's important because that why keeps you going in the tough times and the ugly times. But without you, it wouldn't happen. And so I know I can surmise why you do it, but never forget that. So thank you for all you do. It's great being here, and good luck with the rest of the conference. And it sounds like you got a great crowd out there that we can't see with the lights,
right.
But they look good.
That's right. Well, thank you very much, Brian. Yep. Absolutely.